A scam requires deception, someone lying to someone else about the nature of what they are selling, someone knowing the truth and hiding it. Bitcoin does not fit that definition. Bitcoin is real. The technology is real. The price movements are real. You can buy it, you can sell it, you can lose money on it. All of it is happening in the open with no hidden mechanism. But here's the uncomfortable part. A system can function exactly like a scam without technically being a scam, and Bitcoin might be the most sophisticated example of that principle in modern finance. Let me be clear about what I am and am not saying. I am not saying Bitcoin is a fraud. I am not saying that technology does not work. I am not saying everyone involved is a bad actor. What I am saying is that Bitcoin, as a wealth creation mechanism, has all the structural characteristics of a sophisticated wealth extraction system. And the fact that it is not technically fraudulent does not make it less extractive. Here's the question that matters. If you wanted to design a system that would extract wealth from desperate people while remaining technically legal, appearing innovative, and having true believers who genuinely think they are part of a revolution, what would you build? You would probably build something very similar to Bitcoin. Let us start with the basic math. Bitcoin is a fixed supply asset, 21 million coins. That's it. No more will ever be created. This scarcity is presented as the key value proposition. Limited supply equals infinite upside potential. But here's what that actually means. Bitcoin's value is entirely dependent on continuous new money entering the system. If new buyers stop arriving, the price stops rising. If new buyers start leaving, the price falls. This is not accidental. This is fundamental to how the system works. In a company, if new investment stops arriving, the company still has products, customers, cash flow, tangible value. In Bitcoin, if new money stops arriving, there is literally nothing underneath. The price is the value, period. This creates a system where early participants who accumulate Bitcoin at low prices have a massive financial incentive to convince new participants to buy at higher prices. The earlier you got in, the more money you make from every person who arrives after you. Compare this to a Ponzi scheme. In a Ponzi scheme, early participants get returns from new participant money. In Bitcoin, early participants get returns from new participant money. The mechanism is identical. The only difference is one is technically illegal and one is not. Now let us talk about the distribution. Bitcoin was created in 2009. For years, it was worthless. Satoshi Nakamoto, the creator or creators, mined the first Bitcoin blocks essentially for free. Early adopters in 2010 and 2011 could buy Bitcoin for pennies. By 2024, Bitcoin is worth tens of thousands of dollars per coin. The early miners and early adopters have accumulated massive wealth. Satoshi Nakamoto alone is estimated to hold nearly 1 million Bitcoin. At today's prices, that is nearly $50 billion. This is the essential structure of wealth extraction. The people with information advantages and capital advantages get in early at cheap prices. They accumulate massively. They then benefit from every new person who arrives at higher prices. This is not unique to Bitcoin. It is how every speculative asset works. But Bitcoin has been operating this system for 15 years with complete transparency about what it is, and it has convinced millions of people that this is actually a good thing, that they should want to participate in a system where they are very likely to arrive late and pay high prices. Here is where the psychology becomes crucial. Bitcoin enthusiasts have created a compelling narrative. Bitcoin is a revolution against centralized finance. Bitcoin is freedom from government control. Bitcoin is digital gold. Bitcoin is the future of money. These narratives are emotionally powerful. They appeal to genuine frustrations about traditional financial systems. They offer hope to people trapped by economic circumstances. But here's the thing. None of these narratives change the fundamental math. Whether Bitcoin is a revolution or not, early participants benefit enormously from late participants arriving. Whether Bitcoin is freedom or not, accumulation is still concentrated. Whether Bitcoin is the future of money or not, the price is still entirely dependent on new money arriving. The narratives make people feel better about participating in a wealth extraction system. They transform what is essentially a speculative bubble into something that feels noble and important. Let us talk about what Bitcoin actually does. Bitcoin transfers wealth from late participants to early participants. It transfers wealth from people with limited information to people with information advantages. It transfers wealth from desperate people hoping to escape economic pressure to people already wealthy enough to take speculative risks. This all happens in the open. It is not hidden. The blockchain shows every transaction. But the psychological mechanisms that drive people to participate are deliberately obscured by the narrative surrounding Bitcoin. Here is an analogy. Imagine a casino that advertised itself as a revolution against traditional banking. Imagine it claimed to be offering you freedom. Imagine enthusiastic players telling stories about getting rich at the tables. You would probably recognize that as an extraction mechanism, regardless of how nice the branding was. Bitcoin is not technically that different, except it's worse because it has convinced millions of intelligent people that participating in wealth extraction is actually participating in a revolution.
Now let us talk about the people who lose money, because Bitcoin has to have losers. For every person who got in at $5,000 and sold at $50,000, there is someone who bought at $45,000 and sold at $35,000. For every early adopter who became a millionaire, there are dozens of people who lost their emergency fund. These are not bad people. They are not stupid. They are people who listened to compelling narratives from people who had already made money. They took a risk in hopes of changing their circumstances, and they lost. The Bitcoin system requires them to lose. It requires late arrivals. It requires people desperate enough to gamble. And it requires enough winners visible enough to convince the next wave that they could be next. Here is the question that does not get asked enough. If Bitcoin were actually adopted as global currency, what would happen to its value? If Bitcoin became the money people used for everyday transactions, why would its price ever need to go up? If it is money, then stability matters more than appreciation. But the entire appeal of Bitcoin is the appreciation. The entire narrative is built around getting rich. If Bitcoin actually achieved its stated purpose of becoming money, it would stop being an investment. And the moment it stops being an investment, the speculation stops. And the moment speculation stops, the price crashes. So Bitcoin cannot actually succeed at its stated purpose without destroying the wealth of everyone who bought it as an investment. This is not a minor logical inconsistency. This is a fundamental flaw in the entire system. So, is Bitcoin a scam? Technically, no. Structurally, yes. Bitcoin is a system that extracts wealth from later participants and transfers it to earlier ones. It does this through psychological narratives that make participation feel noble. It does this with complete transparency about how it works, while obscuring the actual implications of how it works. You cannot go to Bitcoin and demand your money back because you feel scammed. It is not technically fraudulent. You knew what you were buying. But the system itself is designed to benefit early participants at the expense of late ones. And it has been operating this way for 15 years, while convincing millions of people that participating in this extraction is actually participating in a revolution. The uncomfortable truth is that you can build a system that functions exactly like a scam, that extracts wealth exactly like a scam, that concentrates power exactly like a scam, without technically being a scam. And the really uncomfortable question is whether that distinction matters to the people losing money.